Welcome everyone to the Ultimate Trading Webinar for Beginners. My name is Danny and I will give you the webinar today. We will begin with an introduction to the company. As you know, we are here since 2006. We have 9 licenses worldwide. For any questions or queries, you can address our customer service right here at the bottom left through the chat with us or through the WhatsApp. Of course, if you're using a different interface, you might want to contact them directly through cs@avatrade.com. As I've explained, this webinar is called a Web Trader. We're going to have the webinar on the Web Trader. And you can also find the app, which is called the AvaTrades Trading app. In case you got a question or a query regarding trading, everything under the trading's umbrella can be addressed to your senior account manager. What this person does is it can assist you along your journey with education, with analysis, with risk money management, with basically everything with getting more familiar with the platform, basically everything. As I said, that's related to trading. A senior account manager is the person you need to contact. And if you don't have it yet, what you can do is you can go to our customer service and ask for a senior account manager to be assigned on your profile. Now, since we're going to use the webinar for the rest of we're going to use the Web Trader for the rest of the webinar, I'm still going to write down the other platforms that we have. Just for people to know. So obviously the MT4 and MT5, AVA futures, AVA options, and AVA social, which we would like to elaborate just a little bit more since this is a webinar for beginners. And AVA social does have some very unique features that supports that can assist specifically beginners. So the way that it works is very, very simple. There are 2 main functions for that app, which is to follow or to copy. The differences are very, very simple. By the way that the app is built is very, very accessible. You can download the app. You will be able to select from lists of traders which trader you would like to copy or follow. And as I said, it's very straightforward. Let's suppose that we are trader A and we would like to follow trader B. Okay, there could be various reasons for me to do that. I see that there are complaints about the sound. I hope that the sound is still all right for the rest of the people, because I've only got one complaint about the sound. I do suggest you'll check your audio settings, because it might be there. As I was explaining, trader A, let's suppose that we are trader A and we would like to follow trader B. And as I said, there could be various reasons for us to want to do that. And the main reason is, as a beginner, I'm not always equipped with a strategy. I'm not always sure what to trade or how to trade, or the proportions or anything like that. So to follow another trader, of course, can give me an idea what to do better. And then inspired by that, I can maybe then move a little bit with more ease. All right, so just a second, I'll try and improve the quality. See if this makes any difference. Maybe now it will be a bit better. At least I hope so. And the way that this works is we will get messages with what trader B is doing. Basically, we are following him and getting messages with the positions that he is taking. In other words, if I would want to trade the same way, what I need to do is to open a trade based on the messages that I receive. But I will need to open it on my own. From the other end, if we're comparing copy, when I'm copying another trader, the execution will happen automatically. The positions will open and close automatically without us needing to do basically anything to copy the strategy. So again, to simplify the differences, follow means messages with information, and we can trade the same way. Copy means that we're actively copying the trades and automatically opening and closing positions based on that, basically. And what it allows us to do using Ava Social is to copy another trader, but to also modify the size of the position. So we can enjoy the strategy, but with a lower margin requirement. This again we could have various reasons for that, but we're not going to go into that now because we want to carry on. Do we have any questions about Ava Social or basically anything that I said so far? If there are, feel free to fire away. So as I said, Ava Social, I highly recommend, even if you're a beginner or not, it doesn't matter. This is a very unique app. It's accessible. It can be very, very helpful. All right. We are going to carry on with the web trader. And as I said, we're going to look at the menus to the left and we'll understand better how to use them. The first thing that I'm going to show you is obviously how I got for the chart to look like this. And this is with the help of those two arrows. So by clicking on the two arrows, I can expand and minimize the chart. So as I said, to the left, we've got some menus. In here, I've got my personal details. Trade is where we are at right now. Positions is to modify any kind of modifications I would like to make for my positions, to close them as an example. Orders for pending orders, and history, self-explanatory. We can click on the history and then to select from which date to what date we want to be displayed. Underneath, we've got the signals. Let's click on it. And then we're going to see, similarly, we've got here lists with some parameters in here. The signal is the instrument's name. Going to the right, the type will be based on the scenario and the analysis that this signal has. We're going to see in a moment. The stop loss is automated price that we can design to automatically stop the position with a loss. Take profit is also a price that we can design on the platform to close the position with a profit. I'm going to say it a few more times during the webinar, so don't worry. I'm just giving it here an idea how to use this procedure. And the entry price is basically the core price that upon that, this signal was produced. Just a moment. All right, so as we understood, and of course to the right, we've got here view signal, which we're going to see in a moment, and we've got signal produced. What this column means is basically from the newest down to the oldest, the signal production time. Why does this make any difference? Well, since the market is moving, and now we're going to click on view signal, we can understand that the scenario displayed in here can already have different meaning in a few hours. So if I'll click on the arrows in here, and we're going to quickly review, nothing too crazy, just quickly review the levels in here and pick. Well, first, we want to match the validity of what's displayed in here to the chart. Since in here, we see that this is daily validity. So we can assume that the candles here are daily candles. So each candle is a day. And in here, we see that it's 1 M. 1 M, it means that each candle here is 1 minute. So of course, we're not gonna be able to see the same scope in here. So what we want to do is to click on the 1M, scroll down to 1D, and then we're going to see a bit more similar picture. We can click in here in the column price, click and squeeze down to be able to see a bit better the chart. Maybe we'll try 4 hours as an example, and we'll clean slate everything that we had on the chart. And now it makes a bit more sense in terms of the analysis display to the right. So if we're looking at here and we can go with the buy type, we're going to just click here on buy. And again, we see take profit, stop loss, take profit, stop loss. We're going to click on the buy. Okay. And automatically we've got take profit and stop loss placed for us. If we're unhappy for any reason, we're unhappy with the values displayed in here, we can always modify that to our according to our strategy and to get a better ratio and better to improve the signal. Furthermore, we can also increase or decrease the lot size based on what we want. So for instance, if we're going to extend this 0.1 to 0.2, then we see the impact directly when the possible profit increased and a possible loss increased as well. So from that, we can understand that the bigger the position is, the bigger the impact that we're going to have on the market. So if we're going to take the take profit and we're going to place a price line to help understand a bit better where that value is, we can now see that 69, which we've marked, is the green line, and the red line will be the 66.95 that came by default from the signal. And to understand better how it works, basically the red line is where the stop loss is. And again, what will happen is it will close the position automatically reaching to that level. And the 69, which is presented by the green line, if it gets to it, it will close the position automatically with a profit, giving us a profit of $274. And as we saw, the impact, the lot size is what determines whether the profit or loss will be bigger or smaller. So by increasing the lot size maybe to even more, then we see that the values will be higher. Okay, we can see that the value changes. So this is basically very, very simple to use. What happens if we, just a second. What happens if we see a signal with no take profit and stop loss and it has those lines instead? So what happens in this scenario, and as I've explained, the older the signal is, the analysis that was on it might have already occurred. So if we're going to click on view signal and we'll try and use the Aussie yen in here, so we can see that the market has already reached a key level. And this is why, even if we'll go with a sell scenario like this, it's not going to allow us to use the signal. And we don't have any take profit and stop loss the way that we did with Brent oil. So, okay, we don't see any other signals like this here. Corn is was in 4 in the morning, so we'll click here on view signal, and then again we see that it doesn't work. And if we'll click here buy, it doesn't work. But if we'll take something that still has a signal, view signal, click on buy, and then we get the values. All right, so this is, as I showed, very simple to use. Again, if there are any questions at this point, feel free to fire away. Now we're going to carry on down. So this will be considered as technical analysis. We've got here the I to show us this is provided by the Trading Central. So this is technical analysis, all support and resistance. Basically, there are two types of analysis. And there are technical analysis and fundamental analysis. And the way that it works is very, very simple. Technical analysis will be averages, statistics, support and resistance levels, basically the how things are moving. And we also have the other end, which is fundamental analysis, which will be articles, God forbid wars, God forbid the COVID that we had, what else? Any kind of governmental decisions. Okay, interest rate is an example, and the reports that we've got. Okay, so I'm going to show you a nice way how to find all of those very easily in our website. And this will be the why things are moving. So basically, we've got um, two things in here. So we've got the statistics and the numbers that we can pull from the chart in a way that is displayed in here and other ways as well. And we've got the reason that it's moving. And if we combine how it's moving and why it's moving, then we can enhance our analysis to a point when we gain more confidence opening a position. So the way that we can do it, the fundamental analysis part, is we can also click here on news, and under news we get the news. So as an example, the pre-European market brief with the euro dollar. We've got here some very nice things to go and read. And if we click here on for related instruments, we also get what instruments it's related to. Underneath, we got discovery with this globy icon. And in discovery, we've got here analysis views and market buzz, which I like to show because again, it's very accessible and it can really quick give you an idea what is popular online and what's worth looking at. So the bigger circle in here, the biggest is Tesla. I think Tesla has been there for a while, so I might as well take something else, maybe something surrounding Apple, NVIDIA. Okay, so we'll click on NVIDIA as an example. There is a question from Innocence. Please, which app are you using currently? Is it MT4 or MT5? And can it be the same? Currently using the web trader. I'm just typing you back an answer for other people to see, which is on our website. Okay, I just replied MT4 and MT5. One more thing that I wanted to say: do interact with the web trader. So even if I'll trade on MT4 or MT5 and I want to modify in here or vice versa, I can do that. I can trade in MT4 or MT5 or in here and then modify on the other. So as I was explaining about fundamental analysis, and now we're in a point where we want to gather a little bit of information about what's happening behind the scenes, and we selected NVIDIA from the bubbles outside. By clicking on NVIDIA, we see various parameters in here. Now, if I don't want to go through all of that, what I can do is I can look at the most discussed, and we see partnership, product release, revenue increase, price target raised, or acquisition completed. Let's suppose that we want to mainly focus on the partnership, and we see only filtered with partnership related articles, which is amazing. And in here we see other various parameters. Again, there is no point going through that now because we want to proceed, but you guys are more than welcome to explore and do your own research in here. One more thing before we actually begin the second part. I know that you guys are waiting for the practical part, but there is just one thing that I want to go through, and this will be at the bottom of this list, which is almost at the bottom, which is the economic calendar. And the economic calendar directly let us just a second, it seems like some things are selected. So in order to filter everything at once, we're just going to click here on reset, and we are nothing is selected. So this is probably what you're going to see here by default. Some of it is gray. It's all so dynamic, high and medium and low. There is a question from Sylvine. What is the minimum amount to start with? I believe it's $100, but I don't want to tell you something that I'm not sure about. I believe it's somewhere around there. Ask your senior account manager for more precise information. I think 100 or 200. Okay, so as we can see in here, the the gray font that we see at the top of the list, if I'll scroll down, are events that already happened. And if I'm going to look at the columns here at the top, we've got the previous result, so what happened last time. We've got forecast, which is a range of what we expect, and we've got the result. So as we can see, all the gray font articles we see in here are with the result. That means that those events already took place. What's under the red line are things that yet to happen. And those things that we would like to focus. Of course, I can also analyze what happened and act accordingly, but okay, let's focus on things that didn't happen yet. But there is a lot of things in here, a lot. There is low and medium and high in various currencies. Okay, but what if I want to focus only on the yen and only on the dollar? So for that, what I need to do is I need to click on Japan flag and on the dollar flag, and now those will be the only things displayed. Okay, it seems like this is only on today, so we're getting news only for today. But what if I want to get more prepared about the next week or maybe even few weeks? What I need to do is I need to click on the date, click again on the following date, and then with this blue trail following those dates, I know that those dates are selected. And we can see at the top that this is the second, and if we scroll down, we're at the third, and we are on we can load even more. We can have here the fourth and the fifth, and we are looking at 2 weeks forward. And we can also filter the impact of if we want to focus only maybe on the main events. We don't want to look at the low and the medium. We want to go for high impact. So what we can do is click on the high, and only high is now selected. One more thing that we can do is we can specify an event that we are looking for right here at the tiny magnify, the upper right. And before we say goodbye to the calendar, there are a few buttons in here, and this is my favorite feature in here, which there is no words to describe the efficiency of that thing. And this is to add to calendar. So we are on the economic calendar, but we can also book it to our calendar. This gives me the ability to get a message on my phone when the event is taking place, and I can directly see the result, and I can go to the market, do the analysis right away. I don't have to trade right away, but I can get to it right away, and I think it's great. Okay, so we're ready for the second part. Of course, as I said previously, if there are any questions about anything that I said so far, feel free to fire away. Now we can finally begin the second part. We're going to erase everything we've got in here, and I think that we can select an asset to do our analysis. There are two ways basically to select an instrument. As you can see, there are lists here. We can scroll down, we can search an instrument, and we can select it manually from the lists. So if we click on the arrow, it falls down. And if we click on indices, we see some indices. Maybe we'll refresh. A little bit of encouragement is never a bad thing. And scroll down to find our instrument while the list is loading. Maybe we'll go with what's at the bottom of the list. Let's click on NASDAQ, extend by the two arrows, click again on the column price, click and drag down, and we can officially begin the second and the practical part. I do suggest you guys will find somewhere to jot down the notes if you need. So this is NASDAQ US Tech 100. We're going to put the name of the symbol that we're working with. So we've got US Tech 100, and okay, even if I'll search for NASDAQ, it will appear. Okay, another way to display another instrument is to erase whatever is here, put the name of the instrument we're looking for, click it from the list, and then we can click buy or sell to open the order entry. However, If you're not selecting an instrument from the outside as I showed, and you're using the search button, the search, you need to pay attention to what displayed to the right, because at the moment, if I'll switch back to NASDAQ just like this and I'll click it from the list, to the right, AUD USD is displayed. To fix that, all we gotta do is just to click buy or sell and it displayed properly. Now, the next thing that I want to do is I also want to modify the chart a little bit better so we have a visible picture of the area we want to capture in our analysis. What will happen next is we're going to go through the menus here and we will customize the chart a bit better for us to do our analysis okay, in an easier way. So this is a search bar. We already know the time frames. We saw that on the signal section. Maybe we'll switch to weeks, and maybe we'll click here on the column area, click and squeeze, drag it down a bit more, maybe pull it a little bit to the middle, and the next icon we've got in here is to change the layout from candles to line. As I always say, the Japanese candlesticks provide with a bit more depth into in terms of analysis. So the areas that I've captured with the rectangle will now vanish when I'll switch to the line. As you can see, although those areas could be crucial doing analysis, since we can pinpoint when will be the potential reversal. So if we switch back to the candles, we get them back. Great. Maybe we'll leave. Okay, well, maybe we'll erase them. Going to the right, we can also enable the crosshair because at the moment there is no data coming from the candles. To fix that, we're going to click on the arrow, select the second thing on the list, and now we do get the data from the candles, specified with open, high, low, and close. This will allow us to assess a bit better what to expect from NASDAQ to do. Now, if we keep going to the right, we can even change the layout and separate the two different charts. So we've got Brent oil to the right, and we've got NASDAQ to the left, and we can even do our analysis for two instruments simultaneously. We can even go for more than two, like 3 or 4, by clicking on the layout button and changing it to what we want. But now we're going to stick only with NASDAQ to carry on. Going to the right, we've got here several parameters so we can place on the chart, like the price line to help capture support and resistance, an oval if we want to specify an area that we would like to remember in our analysis, and of course, maybe a note if we really want to remember a certain thing that we did in our analysis. Okay, now, if we carry on with NASDAQ and we're looking at the trend, we can generally see that the trend is bullish. That means that we can expect NASDAQ to go even higher, especially when we can see that if we switch to months, we see that NASDAQ just recently broke the resistance that it's been at on the beginning of the year. So if we switch back to weeks, we can see that it was just recently happened, and yeah, it seems like we can assume it will go even higher than that. So I think we're going to click on the trend channel, put it like this, click and drag up. This way we can remember better and maybe even paint it in green that we are in a bullish motion. Now, with this in mind, we can assume that this is a buy scenario. As we understood from the signals, there are two types of scenario, buy and sell. When we are buying, our intention is that the value will increase. When we sell, we want the value to decrease. So if we buy something, and it doesn't matter what, if we want to target a higher price, that means that we can use the take profit to automate the position to be closed on the price we specify. As an example, if we see that the current price is 22,690, and for instance, I'm targeting a little higher level, let's say maybe $1,000 higher for our take profit to be, and we also target the same length for our stop loss, so that will be $1,000 down. Now, since this is a rough estimation with no specific justification, we haven't done any specific analysis. We just targeted prices based on what's visible for us now. We can confirm it with an indicator to validate whether those levels are reasonable levels. Maybe it's too far, maybe we can even go higher. So how we can do this? First of all, we're going to click on the take profit, we're going to click on the stop loss and place the values we wanted, and then we can then validate the just a second. We can also validate if those levels, I think our line just disappeared. Okay, there we go, paint it in red. Okay, but this will basically be our loss area from where we are. So we've got the red rectangle with a red line, and we've got a green rectangle with a green line. And now we know that past that point, any higher it will go will make profits. Past that point, any lower price we'll get will be our loss. We can also click on the execute when price hits to automate our entry. By doing that, we can select the price for us to enter instead of the current price if we want to be more specific. So for instance, if I would like to round the 694 to 700 flat, we can have it like this. And then of course, we can also modify the take profit and the stop loss like this. Okay, and we see a flat 1,000 for both. Why? Because we've got only one indice. So at the moment, the situation is very, very simple. We've seen Nasdaq going up. We assume it will go higher. We targeted this price tentatively, hoping it will get $1,000 higher, and we use the same ratio to target the stop loss $1,000 down. The following step will be to justify those levels and maybe customize it to better fit to our plan, and to validate that this is a realistic target and it's not too far away. How we can do this? First, we're going to set a target, and I think 1,000 is not bad, right? Compared to the balance we've got. So I think target 1,000 is not bad. And the next thing I want to pay attention is the time length of how long I'm planning to expect, how long I'm planning to hold the position. Why? Because this 1,000 is great in a month or maybe in a week, right? But what if I'll hold this position for a year? If I'll have to hold it for a year? Again, I'm taking it a bit far away, but still there is this message that I'm trying to convey. To explain to you why we need some proportion, how long to hold a position. There's a question from Ibrahim. Can we get? Yes. The recording can be easily found on our YouTube channel. Thank you so much for the excellent question. All right. And okay, so basically it's the same 1,000 we're looking at, but the week or a month or a year makes it the meaning changes, okay, but not the amount. So I think I'm happy with a week. Maybe I would be happy with even a month. Okay, of course, per day or per hour, but we also need to be realistic. So if I would target 1,000 per day, as an example, that means hypothetically I'm planning to make $30,000 a month, okay, with a $10,000 balance. So this might be a bit. I know that it's going fast, Ibrahim, and I apologize for all the beginners amongst us. But I will recap almost every segment that I make for this to make sense for you guys. But at the moment, as I said, we just place those values. We haven't done anything too crazy. We're just looking at the moment at the structure of how to compose a position. Now, while setting the target give us an idea where to close the position and if we'll be satisfied with the results of this position, we also need to acknowledge the time frame. As I said, 1,000 per day is great, 1,000 per week is great, but 1,000 per year, not really, right? So I think I'm happy with per week. Okay, so we'll put a week here in the time length. The next ingredient that I'm gonna write down is the movement. Why? Because again, I want to validate the price that I'm targeting based on support and resistance or something else is realistic. So at the moment, we're looking at $1,000 away from entry, and we would like to validate this is indeed a realistic price. So how can I know if my take profit and stop loss are too far away? Anyone has any idea? How can I measure where those levels are far-fetched or we are in a reasonable length? Anyone has any idea? There is a question from Martin. How do the trend line influence a buy or sell signal? That is not something that I can answer right now, unfortunately. There is a question, there is an answer here from Dave. You look at the averages. Okay, thank you, Dave. Looking at the averages, okay, what kind of averages? So basically, Dave, you're right. One of the things we will use is an average true range. We could basically look at the previous candle and somehow average from the size of the candle and the tendency of the candle, whether we expect it to move similarly. However, even if we take this candle as an example, and according to that candle, we're going to base our analysis if it will move $1,000 or not, it might not be good enough because we can obviously see that the size of this candle is different than others. This means that we can validate this using an ATR. What ATR does is it analyzes not just the average from this candle, but it grasps several number of candles and withdraw an average from that. So we're going to click on the indicators and then type to filter. We're going to type AVE for average. We're going to click and drag it to the right. In here in the length, we're going to maybe keep it by default and we're going to select a different color so we won't be confused. At the moment, we'll stay with yellow and we can immediately see that the average indeed is 1,000 for NASDAQ. So it's even more. So we're going to write here ATR equals 1,017. And now, since we're aiming for $1,000 away, let me ask you guys, are we in the range? Okay, to help explain, we used an average true range to withdraw an average from the previous few candles, 14 candles, and we targeted $1,000 away. Now we're comparing $1,000 away versus the actual average with it, which is $1,017. So my question is, are we in the range or we targeted the price that is more than the range? In the meantime, I'm going to read some of the questions in here. Good morning. I'm watching from Brazil. I'm really enjoying the class and how to use the platform, although I don't understand English very well. was able to understand. Okay, I have an excellent solution for you, Mr. Oliveira. The solution is, um, let me type it down for you. Okay, so basically what I wrote back to Oliveira is you can use the YouTube automatic translation function to have translation for the webinar. I do understand that for other languages, this might be a bit complicated since we're going in a certain pace. And everyone who wrote that we are in the range is correct. Everyone who wrote that is in the range is right because we compared 1,000 we targeted initially to the average, which is more than what we targeted. With this, we have a reason to believe that those levels are valid. Now, the next step we can do is we can also choose how many units we need. And in this case, let me ask you again, since we only have one unit and we're already at 1,000, which is exactly what we want to make, do we need to increase the size of the position? Another question, guys, another 10 seconds that I'm going to let you answer. Obviously, I already see people giving the right answer. I'm very happy because it shows me that those people understood. Again, I'll simplify the question. We have one index, and this is NASDAQ. We're already acquiring one unit, and we're making potentially the 1,000 that we targeted. My question is, do we need to increase the size of the position? Let me show you what happens if we do, okay? So if I'll click here on the plus, and we extend the lot size from 0.02 to from 0.01 to 2, look what happens with the impact of the results. So basically, we don't need to do anything. We can keep it like this with one unit, and very good, very good. All the people who wrote no are correct. Okay, all the people who wrote no, this is the right answer. Currently, we're exactly where we want to be. So we're just going to put here 1, but I will give you an equation which is target divided by movements equals units. For this, for future references, for any other instruments you would like to check that procedure with. Now, when this in mind, all of what we did here is quite procedural, so we can recap. And of course, as I said previously, if there are any questions about the process or anything that I've explained so far, feel free to fire away. So the first step we did here is we just looked on a nutshell on the general trend. We identified those two ovals that helped us capture the lowest part. We can even place a price line here and call it the support. Okay, and we've got an oval at the top to show us at what segment NASDAQ breached the resistance. And we can see that it happened roughly on December. From that, we can assume that NASDAQ can carry on up. There is, since this is an all-time high, there is no previous data to grasp. So I just targeted $1,000 away. I targeted $1,000 away for stop loss as well. This, as I said in the beginning, means the take profit will close the position automatically with the profit reaching the green line. In here, it will close the position, the stop loss will close the position automatically, reaching the red line. Currently, we automated the entry as well. And as we can see, the 1,000 that we can make is what we targeted. So we didn't need to change anything. But if we would want to target, as an example, 3,000, okay, what we would need to do in this case, Who knows what I would need to do in order to make 3,000? Still keep the same analysis. Let's suppose we now want to make 3,000 and not 1,000. What needs to be done here to get to 3,000? What needs to be done here to get to 3,000 from the 1,000 that we are making currently? Who knows? Very good, Usher, to increase the lot size, basically to increase the size of the position. So if we go up and we click here once and click here again, we see that we can make what we wanted to make. Okay, and by extending the lot size, increasing the position, I basically increase my possible profit and loss. Now, let's suppose that I'm not really happy with the ratio that I'm looking at. And what I would be more happy with is to maybe potentially gain, let's just write it down quickly, the numbers we've got in here. Then we've got the take profit. The take profit is 23,700, and the stop loss is 21,700. This will lead us to 1,000. That's 10% of our balance. And we've got the same ratio with the stop loss. But let's suppose that we're not happy with this ratio. And how can I adjust my exposure from 10% to 2.5%? Who can tell me how can I modify my stop? I was very close to give you guys the answer, but how can I modify the exposure from 10% to 2.5% while maintaining our profit? While maintaining our profit, keep in mind we only have one unit, so we can't reduce the lot size. Who knows what else can be done to get the ratio to 1 to 4, 1 to 2.5? So what we can do, since we're looking at $1,000 away from the entry, okay, current expected movement is 1,000. We can divide it by 4, okay, which is 250. And now, if we go 250 divided by 10,000 and multiply by 100, it gives us 2.5. I know that was a bit fast. I am aware, guys, that this was a bit fast, but I'm going to simplify it with words. Just a second. So basically, if we take possible loss divided by balance, that equals factor. And then we can take factor times 100 equals exposure. Now, with the same logic in here, if we divide 250 by 10,000, this will be 0.025 times 100 gives us 2.5, which is exactly what we wanted. Any questions so far, guys? Any questions? Oh, sorry. Okay, so I wrote here accidentally 500. Okay, but maybe we can use it. How if I wouldn't want 2.5, I would want. Okay, let's place the values first. We'll place the values first. We're gonna take the entry. The entry is 22,700, and now we are $1,000 away. So to be able to be $250 away, we're going to go 22,700 minus 250. This is 22,450. This gets us exactly to where we want it to be, with $1,000 potential profit and 250 potential loss. This way, we're potentially making 10% gain, and we are exposed 2.5 on this particular position. The last thing that I'm going to teach you today, guys, will be to validate that we have the margin to open the position. How can we do this? Basically, as you can see, the current value for NASDAQ is 22,679. So we're going to write the price per position. So we've got price per position. This will be 22,678. And we've got the number of positions. In this case, each one. We already know each one. And if we go the price per position times number of positions, number of units, okay, then we get the value. For people who are not using the web trader, this is a very valuable equation. For people who are using the web trader, it's already here. Okay, so I didn't need to calculate the value since it's already here. And if we go the value divided by leverage, we get the margin impact. Also, imperative ingredient that I'm going to write down will be the leverage. What the leverage is doing is very simple. It multiplies buying and selling. In other words, if we see a leverage of 1 to 20, the meaning is our account will have the ability as if I had 20 times more specifically for NASDAQ. So if I'm looking at this 20 as a multiplier, we can basically divide the value by the leverage the same way it's written here, and then it will be 22,678 divided by 20, and this is again already written for us right here in the margin impact. Okay, as we can see. And that's basically how we can validate that we have enough margin to take the position. Again, I'm not getting into if it's good or not, if using 10%, 11% of the in a single position it's good or not, but this is a nice way to find out if it's doable. Guys, we still have another 3 minutes. If there are any questions, feel free to fire away. Let me read some of the question we have here. There is a question from Masiha. What is the balance? The balance is displayed right here. The balance is displayed right here, and the balance in this case is $10,000. If there are any more questions, feel free, guys, to fire away. Here's a question from Harry. Why did you choose 2.5? Thank you for asking that. Okay, I'll explain why 2.5. I'll explain. As you can see, in this particular position, the way that it looked in the beginning, we looked at 1,000 potential gain or loss. So if I'll multiply the same ratio for other instruments as well, any other instrument really, and I would diversify with this position, and as an addition, I will take another several positions. In this case, with the same ratio, for every position that I lose, I need to have a position that will trigger the take profit to break even. So if I've lost 1,000 in here, and I'm trading the same ratio with another position with Euro USD, if I lost 1,000 here on NASDAQ, to break even with Euro USD, I need to make 1,000, right? When I have 2.5 on my other end, if for instance I'm losing 250 like here, and I have the same ratio with Euro USD, what will happen is I'll lose here 250 and I will make 1,000 with Euro USD. This way I can keep making progress and compensate, maybe break even a bit more efficiently. Okay, so different ratio, gives you the ability to have harmony between your exposure to your gain. And what we also want to acknowledge that is super important using this exercise, doing this practice, is that the exposure written in here is only for this position, and it's not accumulative if we will multiply this. So for instance, if we're gonna, as I said, if we're gonna extend and use the same ratio with other instruments as well, just the ratio, not the values, okay, and it doesn't really matter which instrument we're using. So let's suppose in here, this will be AUDJPY, and in here it will be corn as an example. Okay, so the values will be different, of course, but with the ratio just a second, with the ratio I am this will be accumulative. So this 10% from here and 10% from corn and 10% from NASDAQ, but the other way around as well. The exposure is multiplied as well. It's combined. So take this to your consideration while doing the risk money management. Unfortunately, guys, our time for today is up. Thank you all for joining today, asking those important questions. I hope you enjoyed and you could pick up some practical things moving forward. So I wish you all have a fruitful week. Best of luck with trading and have a good day.